What's up everyone, Lord MC here and welcome back to Track the Harmonic on the first video of 2023. Hope you guys had a wonderful New Year's with your loved ones and are ready to start the new trading year with the banger. Quick little update on the Twitch channel. I am super excited on what's next to come and I will be giving a lot more giveaways as the channel grows. One in particular is giving away 1-year licenses to the HBC Harmonic indicators I use just as a thank you for supporting the channel. So if you want to be a part of that, head over to the Twitch and follow me on there if you haven't done so you don't miss out on any of the updates on when that will happen. But back on schedule in this video, I wanted to cover what we can expect this week in the market. But before I get into that, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So SPY today for the day went as high as 386.43, low being 377.83 before closing the day strong at 380.82. So what can we expect here off of this this bearish shark pattern on the 1 day? So you can tell here it's been hovering at target 1 at 379.06 as support. So the volume for today came pretty much strong as last week's close on Friday. So a little bit less, but still the move warranted this push down and then closing up just above 379.06. So we have a catalyst tomorrow, and that's the FOMC minutes, and that can go either direction. To me, it looks like it's bear flagging here and consolidating. So it's gonna tomorrow we'll probably find out what direction the market is gonna go. Whether it's gonna go below 379.06 and continue that type of reaction at target 2 at 355.17. Obviously, that's not gonna be an all in one go, but we'll see whether the market decides to continue going down or you get a push up back above, probably to test 390. And then breaking up above that, maybe test 200 EMA at around 399, and then possibly doing a type 2 reaction back to terminal, and then maybe up to hop. Still too early to tell for that. One thing I wanted to share here real quick, here on the daily, you are creating what looks like a head and shoulders. This would be the left and shoulder, this would be the head, and this would be the right. So depending on what the data comes out with FOMC, if let's assume this would play out a right shoulder here, you would come up to around 390 and you come back down and then go, the neckline would be somewhere around here and you'd continue pushing down to possibly test that target 2 at 355.17. If I bring over here my drawings, as you could tell today, it tried to touch the gap at the entrance at 386, got stopped at the 21 EMA before bouncing down. Key level here, in my opinion, this is harmonic. All these yellow lines you see here are harmonic levels from prior patterns. This one right here being 374.67. In my opinion, but if you fall below that, you'll be trading between 374 and 371. Last point of support for me specifically would be 371.67 before you continue coming down to possibly test at 352.17. So if you're going long here on SPY, you definitely want to break above 383.90. As you could tell, it has been level of resistance, strong resistance here. From Monday the 19th, you got rejected, came back down. You broke up above on Wednesday the 21st, but you came back down again. So now it's just hovering around these ranges here. So we'll see whether SPY continues to push up or push down depending on FOMC, but it is consolidating for the almost the past in this range between 393 and the 380 range for the past 10 days, something like that. I take this tool here, 10 days. So major move is coming. We'll decide whether, and we'll see whether that is up or down coming into tomorrow. Switching over to the triple Qs here. The triple Qs off of this bullish butterfly pattern. Talked about that it's done its type 1 reaction up target 1 several times, consolidated, and now broke down to possibly do a type 2 reaction back down to hop. As you can tell, 260.14 here is a previous harmonic pattern target here where it did bounce off of 260.14 and continued back to XA here and got rejected off the 13 EMA and closing the day at 264.48. In my opinion, if you lose 260.14, you will come back and test 256.86, and that would possibly, losing hop here, would lose the October lows here at 254.26. Where that goes, who knows? But I do think The NASDAQ here is on a crucial level here if it doesn't hold at least hop, right? You break down off of hop, you could potentially start looking at lower lows. So why I think this is important, that 260 range on this push up here after COVID lockdowns, you were pretty much on a rally without no consolidation. Maybe you argue consolidation happened somewhere around here. So if you lose this 260 area, hop says around 258, I believe. 258, you can come down possibly around the 243s and maybe even worse. But this rally was on it was a strong rally up, and you kind of didn't consolidate. So levels of support would be somewhere in the 240s. You can bring over here the auto support. Auto support doesn't even have anything into all the way into 165. I don't think that there's no support down there, but it is, in my opinion, a level of capitulation here for the triple Qs should you not hold that 260, 258 range there because of this strong rally that you got with no consolidation. So very, very important key critical levels here on the triple Qs. Off of volume is kind of was this push down here was on increasing volume compared to Fridays, so we'll definitely get some volume spikes. I don't think we'll get some tomorrow with FOMC minutes that come out at 11 a.m. Pacific Standard Time and 2 p.m. Eastern. So definitely keep an eye on the NASDAQ because it is closer to out of the three indices, it is closer to the October lows. So jumping over to the Dow Jones here. The Dow Jones off of this bullish butterfly on the daily, still holding up strong above this descending broadening wedge. Volume has started to pick up on this push down here. It still has yet to test the target 2, come back to test do a type 2 reaction, holding pretty strong above the 50 EMA here. But volume did match Friday's close. So like I said, if you come down and lose this level here, you're going to be going down to 322.62 and then possibly 380, 309.97. You do have a gap here at around 311. Still far away, further ways down to go. We did get this gap fill here. Gotta delete this. We don't have a gap fill down there anymore, but what does the harmonics tell us off of this bullish butterfly here, tongue twister there? So RSI, we're at the midline here, around 50 here. Not oversold, not overbought. It's in the midline here. HSI is telling us it just crossed up above the midline, kind of consolidating, just like SPY and the triple Qs are consolidating here. So the Qs here is in consolidation off of this bear flag here. So FOMC is going to pick that direction. If you're going long on the Dow Jones here, you definitely want the FOMC minutes to be bullish, and you want to be breaking up above 343. And then for the most bullish case scenario above 357, you can fill this gap around the 360s. If you get bad data here, you're probably going to come down, test the 322 range, probably the top of the descending broadening wedge, and then if you fail that retest and you come back down, maybe do a type 2 reaction up to 309. There's a gap fill here around 311, and then maybe test hop here down below at 283. It's a big push down. The Dow Jones is holding pretty strong up there, but we will see what the FOMC says tomorrow. Jumping over here to Apple, I wanted to cover Apple here, as Apple has had a field day the past couple days. It was the last couple weeks, especially since last week. Apple did close at 125.07, and the low being today 124.17. So it did create 52-week lows, which is very insane. I'm going to move these drawings here real quick. So off of this bullish bat pattern that was generated here on Tuesday, the 20th of December, normally you want to wait a couple bars here, just find out what direction, if it's going to go and do a type 1 or type 2 reaction. Obviously here you got a HSI arrow trigger to the buy side. This is why you should normally wait, because you don't know off of this, right? You normally wait a couple bars here, 3 to 5 bars. Essentially you failed to do a type 1 reaction, and you came back down, tested here XI at 134.41, and now you're going over to hop at 122. What it looks like is going to 122.40. Volume did increase today. Today was a very very strong push down on Apple, and you are starting to see maybe a start of capitulation here for Apple. I'm going to bring up my drawings back again. In my opinion, 121.95, which is a previous harmonic level, if you lose 121, in my opinion, that would start capitulation on Apple. There is a gap here at 120, then 112, and then down the line around 96, and then 85 would be very concerning. So 121.95 is a range that it likes to trade in between 195 and 85.68. Why do I say that? Because as you can tell here, if we go back after the COVID lockdowns, you broke up above here. You just went on a rally. You could argue that you consolidated somewhere around here, around 96, which is where you have that gap. Maybe around the 108 to 110 level, you also have a gap there. And then you just straight up push to 121. So you really don't have any type of support here. And you could argue, like I said, these two gaps are areas of support. So losing 121.95, excuse me, you will come down more than likely, possibly, straight down to test that $85.68 dollar range here. You have a lot of gap fills here. Even below 85.68, you have a gap fill right at the COVID lockdown levels here around $57. Do I think it's going to go there? No idea. I'm just looking at what the chart tells me. So this rally that we got broke up above was a strong rally, but no, we didn't find levels of support and resistance here. So the same way Tesla, we'll get over to Tesla in a bit, the same way Tesla had rallied crazy, now it's because it rallied crazy, it came down real quick because you had no levels of support. So Apple in the same situation here at this 121.95 range. So if the data is bearish tomorrow, losing 121.95 will be a very key level for Apple to lose. So if you're going long here and you want the data to be bullish for a continuation to the upside and maybe start doing a type 1 reaction, you're going to have some resistance on the way up. So definitely want to break up at 134. You'll have one resistance at 137, 140, then 147, and then maybe you test target 2. Obviously that's not going to happen all in one go, but Apple definitely on radar. As far as RSI still has room to the downside, the midline here and HSI did come back up and then cross below, so maybe a test 122 on hop, and AMP RSI still has room to go to the downside. Jumping over to Microsoft here. Microsoft here off of this ABCD pattern. It out of Apple, Microsoft, and Tesla, Amazon, Microsoft has apparently been holding up strong. It did have a push all the way down here in November, November lows, instead of it had October lows, but then it had further downside here. So I don't know if Microsoft found its bottom. From the looks of it, it's been consolidating here. It's been rejected. It's been finding support off of the top of here of this gap around 235. But like I said again, data is bearish. You come down here, you possibly fill that gap at 228, and then maybe you do a type 2 reaction for up down to 210 to do further capitulation here. You definitely don't want to lose 230 on Microsoft here. 230, you come down to 219, and 210 on hop, but there is strong support around here. I do think Microsoft is holding pretty strong right now. So if you're bullish, if the data is bullish, you definitely want to break up above 242.50. Every time it's been breaking up above 242.50, it goes straight up to around 248 and above. So as you can tell from prior breakouts here, if you break 242, you go to 248 real quick. It's the same way you break that down, you come down below these $230 range. So we'll see tomorrow. So if this data is bullish, you want to break up above 242, then 248, maybe do test target 1 at 256, and then down the line at 278.96. So we'll keep an eye out on that. Jumping over to Tesla here. Tesla, let me move this drawing here. So Tesla here, as you can tell, volume is still continuing to come in for Tesla. There was some bearish news in the morning on Tesla with the production of cars. So this push down was on increasing volume. Tesla is completely oversold on the RSI here below 40. It's around right now at 25. AMP RSI is on the daily did cross the midline where it looks like it's trying to push up, but AMP RSI is coming back down. So what are our levels here for Tesla? So let me remove this here. So let me actually bring in the 3-day chart. So off of Tesla here, it generated a new bullish bat pattern here. Off the 3-day here on Friday, it generated this pattern. So we're still a little bit early to see whether it's going to come down to hop. This is crazy to say that hop has 45.39. We'll get to why there's a target there of 45.39. But if data is bullish, you maybe come back here and test 127. You definitely want to break above 127. Then after that, 171, 225, and then 297. This is obviously on their 3-day chart. This is going to take some time. It's not going to be all in 1 week or 1 month. This 3-day chart will take a while for that to happen. Off of bearish data, you can continue down. If I bring over here the weekly and where we are in the weekly. On the weekly is this bullish Gartley. It was generated back in November. Called out to hop here at 113.12. So I've been eyeing 113.12 here, and it's a level of capitulation here from a previous pattern. If I bring my drawings, this 113.12 range here, once you cross this down to the downside here, you would possibly trade in this range between $113 and $92. So you could potentially see Tesla here below $100. Why do I say that? Because here at 113, if it loses that support, which it already lost the support, it likes to trade in between 92 and that $113 range. So in the same way that almost similar to Apple here, Tesla was on a straight up rally here with no consolidations. You could argue in some cases there were some, but they were all weak, which is why the same way you went up here, this is the same reason why you're coming down here fast. So in my opinion, if you don't hold this $92 range, this rally, like I said, after the lockdown levels here, you straight up pushed up with no consolidation. You could argue maybe consolidation around here on 66. So you have $60 with the gap down here. You have 76 gap down, as well as an $82 gap down, and then that $44 gap down here, which is coincidentally around where hop is on the 3-day. So things could get really nasty. I don't know that Tesla will do that. I'm just looking at what the chart tells me. Very important that for Tesla to hold these levels if you are going long. Otherwise, if you don't hold off to this $92 range, it could be very nasty for Tesla. And that is what the Harmonic on the 3-day is calling, at hop now being at 45.39. Crazy to say, but I mean, the Harmonic, we're there for the weekly, calling out 113.12, right? So there's a lot of things going on with Tesla. Definitely will keep an eye out on that, because this stock has lost a lot of its value here. I believe it's down from all-time highs to its 52-week lows. It's down 74%. That's insane. But we'll keep an eye on that. Jumping over to, wanted to cover NVIDIA here. So NVIDIA on the daily. NVIDIA on the daily closed at 143.15. NVIDIA is another stock here that is also, in my opinion, another level of capitulation should it lose 134.64. These levels are from previous harmonic patterns, as you could tell here. When it broke down from 134, you came all the way down to 107. And then when you broke up above 134, you broke up above 143. So right now, it did break this 143 today with volume. Volume is increasing. So last level of support here I have on NVIDIA, should it come down and break this, is to 107.64. And losing 107.64, just like a rally here. The next level of support, I guess you could argue somewhere around the 80s. If I turn on the auto support indicator here, it has it all the way down to 44. I'm not saying it's going to go there. This is just key level here to watch out for NVIDIA as well. A lot of bearish indicators are coming out for NVIDIA. Volume is increasing. RSI still has pushed to the downside, and I think there is a harmonic here on the 3-day, if I'm not mistaken. Today there was one at hop, but it lost hop right now. So yeah, key important level here for NVIDIA. So keep an eye out on that. I do think NVIDIA may have a little bit more push here to the downside. So as you can tell here, this level 107.64 on this rally up. No levels of support. You could argue 97 maybe. So definitely keep an eye out on that. It looks like also, I believe it was this one here, where you could tell it's looking like a head and shoulders pattern, right? So the neckline will be somewhere between that 134.64 range. So we'll see on that. Let me see if I'm missing any other important ticker here. Amazon. Let me cover Amazon real quick. Jumping over to the 1 day here. Amazon is holding on. It's very bearish on this push down here, but you do have volume increasing here to the buy side. This level here, 81.30, in my opinion, is capitulation zone, but compared to other blue chips here, Amazon did take a hit earlier this year, so it looks like it's finding support here at 81.30. Why 81.30 is another level of capitulation? Because if you lose this level here, you can come back down to possibly 65 on Amazon, but it is finding 81.30 here as support. So if you're going long, you definitely want to get above 85.82 and then 88.27, then possibly test hop and fill down gaps later down the line off of bullish FOMC. If not, the next level to watch out here would be rejection of 85.82, come back and test 81.30, and then you start coming back down again. Auto support here has a next level support around 77 should you lose 81.30, and then yeah, $40. But we'll see if that happens. I think the last one I want to just cover is VIX. So VIX 2289. We can't really tell what it's gonna do here. It's kind of consolidating. It did gap up, but target one is calling 2780. I think tomorrow we might get a little spike here with FOMC. If it fails, you come back down to 2168 and then 2127. You definitely want to be below 20 for the VIX if you're going long in the market. Otherwise, if you enter around 24, it should be very concerning because the bear market will continue, in my opinion. So that is, I think that's all I have for you guys. So I will be streaming tomorrow, same time as always, 15 minutes before open. So if you want to head over to my Twitch, the link to the description is down below. So if you like this type of content, guys, please consider giving me a like and subscribe to the channel. It does help me out. But other than that, that is all I have for you guys, and I will see you guys tomorrow. Take care, everybody, and peace.